Hello guys, this is fairbinaryoptions.com, and it is time to take a look at the Great Britain pound and US dollar as it is about to break higher. Why about to break higher? Well, I would say that markets are positioning or are trying to position for quite a journey here, and from my point of view the previous move ended, or the previous wave ended with this small contracting triangle here. So this small contracting triangle here is key for our count here, or for the scenario that we are presenting in the recording or in this recording, because it means that the previous wave actually ended here at the end of this contracting triangle, and from this moment on, take a look at this, we have a five-way structure to the upside, and I would say this is a classical 1, 2, 3, 4, 5, all the rules of an impulsive move respected. The extension for the third wave, the principle of alternation respected, everything, the 0 to 2 trend line, everything is there. So I would say that this move to the upside will be actually only a first wave out of a five-way sequence that is about to unfold. So let's say the first wave out of this degree is done here. Then what we have to the downside? And you might say, well, if this is the first wave, then this is the second wave here. This is something that any regular trader will put here. Well, we are not regular traders. Second waves rarely go like this. I would say that this is only the first correction. First correction. And then the X wave. What do we have for the X wave? For the X wave, we have a classical ABC in the form of a zigzag that goes A. Alright, I will need a polyline, not this one. So that goes wave A, and the B wave in the form of a contracting triangle, A, B, C, D, E, B wave, and then a five-way structure, 1, 2, 3, 4, 5. So A, B, C, ending here. So first correction, X wave, and then, well, then we're looking for the second correction. But the second correction, it is forming a possible another contracting triangle. So what I'm looking here is the following: A to the downside, quickly retrace for the B wave in with the NFP, something like C, or maybe not done the C wave, maybe a bit lower, who knows, C, D, E, and break higher. And mark my words, when this one is going to break higher, then you just don't want to be short, because it would be so aggressive that you or the bears would not even know what just hit them. So what I'm trying to say here is that the second wave most likely to end around these levels. This is being called a running, a double three running. It is a running variation of a complex correction or a complex move. You simply don't want to fight such flows. In terms of Elliott waves, or in terms of interpreting corrective waves, this is being called, like mentioned earlier, double three running. All the three corrections, because we have three different corrective waves. The first correction here, a complex one, probably a double combination or a double zigzag, and then the X wave or an intervening X wave, and then another correction. But this correction here to be most likely a contracting triangle. I would love to buy those highs. I would like to be on the long side. But when you trade binary options, what do? You go and buy call options. So in order to avoid a consolidation in this range, okay, I would like to buy call options with end of week expiration day, and that would be my choice for the expiration date. So let's write on the screen that what I'm looking here is looking to buy call options with end of week expiration date. And again, end of week expiration date means Friday, when the US markets are going to close, so basically 20 GMT. And this is the recommendation on on fairbinaryoptions.com for the analysis of today. Whenever you see the word running when you are interpreting technical analysis or when you're looking at markets, running variation means that markets are about to break that level, quite impressive and quite powerful. In this case, the move is bullish, the levels are to the upside, so therefore buying the call option. Whenever you buy call options, you look for price at expiration date to be bigger than the striking price. Our expiration date is end of week. Striking price, this one, 68.70. Have a great day, have a great evening, and make sure you check lionknife.com, as all these analyses are possible due to the help of our sponsor, lionknife.com. Bye bye.